Our first baby is due this month. So
congratulations.
Congrats, first of all.
That's awesome.
We are working on step 3, paying off $37,000 combined on 2 car loans.
Okay.
Should we pause step 3 to move to step 4 and build up reserves with the baby coming? Both our jobs are in stable industry, which is good news. And I think this is a question a lot of people face, right? What do you think?
That's a hard one. I mean, I don't look, we don't have stumpers around here, but
I
that's
will say, let me give the caveat. We do at the Money Guy Show say like, there's not like some perfect magical financial time for you to have a baby. Like that's
right.
a life personal decision. You can make it work in a lot of different financial situations,
That's
right?
right.
On a lot of steps of the FOO.
You'll notice
you're going to be okay.
Will you hold the financial order?
Yes.
You'll notice baby is not in here.
Right.
Like it's not like I got to get past this step to be able to do that step. Like that's a different type of decision. That's a life decision, not a financial
Well, here's
decision.
what I also was thinking. Like if they're on step 3, that means they have their deductibles covered.
That's
So
right.
like say you have a high deductible plan. Okay, you're probably going to hit that. Hey, you have that covered. Like this is all good news, right?
So here's what the only thing. This is where Zach, your question, like you remember when you used to take tests and you read, you'd be like, I know this, and the last thing they throw into that question, you're like, oh, they got me, right? We have a bunch of our associates here studying for CFP exam, and so they're like navigating all that right now, trying to figure that out. Here's what he said. He said that he's on step 3, but the $37,000 is on auto loans.
Right.
Right. And so one of the things I would ask you, Zach, is when you really assess this, are your auto loans, in fact, high interest debt? Like, because sometimes we say, it's a little nuanced based on your unique situation. If this were credit card debt, that's a different thing. If you're paying 22% plus of an annual interest rate on that credit card debt,
That hurts a lot more
the
to
answer's
knock out.
easy, right?
Yeah.
You knock out the credit card debt because if you have an emergency, you know what you're going to do? You're going to swipe it right back on the credit card. So even if you're building up cash, like right, it's like robbing Peter to pay Paul. You want to attack that way. If you have $37,000 of auto debt, here's the first question I'd ask you. Okay, let's look at your payments and let's look at your cars. And are we inside that 23.8 cocoon? Like, are we in our 23.8 cocoon? Do I have 20% equity in the car? Have I been financing it for less than 36 months? And does the car payment not exceed 8% across both of them, 8% of my monthly gross income? If that's the case, and you determine, okay, yeah, I've got an 8% car loan, but I'm in my 20s, and man, 8% stinks, and it's high-ish, but maybe it's not high-E for me, especially if I'm in 23.8. I don't think there's anything wrong with beginning to build up cash in step 4 of your emergency fund. But you have to determine, is the car debt actually high interest debt? Because when you have a baby, and look, you've got a gaggle of kids now, right?
Yeah,
there
totally.
are expenses that you just don't expect. Like people are like, oh, I got to save for the baby because I'm getting the hospital bill. Yeah, that's part of it. But then you got to get the diapers and the butt paste and this binky and that binky, and you try all the bottles and you get this thing and that.
Right.
And you're like, holy cow, where did all this money go? If you can have a little bit excess cash and you can have that emergency fund, you can have that money built up, it just gives you the, because Zach, this is your first,
peace of mind.
This is your first baby. And look, we've both been there. It's not easy. It's wonderful. But there's going to be a stress that comes on when, I remember for me, when they gave me my first daughter, when they gave me that kid and said, here, you can take this home with you. I said, you are insane. I have no business taking this baby. This at the hospital is wonderful. The nurses knew what to do and they'd come and they'd help and it was great. And there's this stress like, oh, wow, I'm in charge of this person. If you can do things as you navigate, like build up cash, like have an emergency fund, like have some reserves, so that's kind of one less thing you got to think about, it's just going to allow you to focus on the main thing, which is, hey, figuring out how to be a new parent, figure out how this new family circumstance that you're walking through works. So that took a long time to answer the question. I would figure out, are my auto loans, is my auto debt actually high interest? Is it inside the 23.8 confines? If the answer is no, it's not defined as high interest based on my situation, and it is inside of 23.8, I do think it's okay to begin building up some cash. If your $37,000 is in credit card debt, you got to just knock that out. Because your credit card, until you get it paid off, is also your emergency fund, unfortunately. And far too many Americans find themselves in that spot.
And I also think it's worth noting, like you're kind of also acknowledging the FOO is not necessarily a straight line. We talk about that a lot.
Oh,
like,
do we have that thing? Can we pull that thing up?
We might have that slide. So if we do, we're going to pull it up. But like, especially if your baby's due in like a month and you're like, man, I would just really feel better if we put this X amount of dollars aside. Okay, do that for 2 or 3 months.
Yep.
And have a deal that, hey, but by the end of that 3 months, we're getting back and we're aggressively paying off the cars. You know, like there's nothing. That's what real life is. I love it. You know, so it's not like you're totally breaking the FOO by doing that. And in fact, the FOO is what it will keep you on track, that you won't just indefinitely stop that. It's going to like allow you to take that 2 to 3 month break because of life circumstance and then get right back on track and really not miss a beat.